Randgold Resources shares trading lower this morning after announcing Q3 profit down 15%. Well, to discuss the company's outlook is Chief Executive Mark Bristow, who joins us live from the London Stock Exchange. Mr. Bristow, thanks very much indeed for joining us today. We've got to start with the news of the day, obviously the re-election of President Obama. A bit more certainty for the commodities industry as a whole, or where do you stand on this?
I think the world economic crisis is still what it was yesterday. Mr. Obama's very clearly got plans, but those plans have still got to work through the economy. And I think it's always good to have certainty, I guess. But you saw gold price rally yesterday. It was more on the fundamentals, I believe, than sort of any anticipation of politics in the US.
Okay, well, let's talk about your company now. It's a bit complicated, so you'll have to explain it. Third quarter profit down 15% on the prior quarter, production up 12%, and ounces sold down 10%. And I know there's a reason for that. So sum up your third quarter for us.
I think if you look at it, we guided a flat quarter on quarter, quarter two, quarter three, and that's when you take in the adjustments. We didn't ship all the gold this quarter, but the impact of that is $33 million on revenues and about $12 million on net earnings. So that's a big difference. The reason being that the refineries were doing an audit and they took our gold later. And also we had a big charge, $10 million on depreciation, on which we also guided last quarter, associated with the pushback at the Yalea South open cast mine in Lulo, and then an extra $3 million on tax because of the significant performance in Lulo over Gunkoto, and Lulo's in tax and Gunkoto's not. So that really describes it. I think it positions us well for a good finish to the year. The challenge being, as we pointed out, Tongon still frustratingly not up at design, and that's really our big focus at the moment. Our big growth project, Kibali, well on track, comfortingly on track.
Okay, so Kibali's still on track for starting production before 2013. But generally, are you optimistic about the environment for 2013 for your company?
Oh, yes. We are going to today refresh our guidance looking out to 2016. Our target is to break the 1.2 million ounce production target in 2015. We're well on track to achieve that. There's a lot of input cost variations in the industry. We are now more comfortable with the underground given the performance we've seen this last two quarters at Lulo. And so, we'll be refreshing our production and cost guidance out till 2016 at lunchtime.
And the gold price, pretty supportive this year. Do you expect that to continue if the global economy is still fairly sluggish?
Yes, Nigel, I think the key for us, and again, we'll be referring to it again, there's just the industry, despite the gold prices, ex-growth. So very tight supply side to the equation. A lot of pressure on costs. So, and Randgold Resources is certainly, showing the opposite. We've got a decreasing cost profile and a very strong growth in our production. And so it's a good place to be, a good industry to be still, I believe.
Now, given all the unrest in South Africa, are you concerned about similar events in the countries that you operate in? I mean, and also, perhaps more importantly, do you have contingency plans? I mean, you have power cuts in Ivory Coast and unrest in Mali. Some of these places are difficult to operate in. Do you have contingency plans?
Nigel, yes, of course, we live in a dynamic environment, and that's the risk-reward equation that we have invested in. We don't believe you can compare South Africa to the countries we're operating in. The risk profile is very different. These are countries that really want investment. They are looking to grow employment. They're looking to participate in revenues. And they're young economies with lots of ambition, and so we manage that dynamic all the time. It comes with the territory. It's what we selected and we prefer that over many other emerging markets around the globe.
Right. Final question then. Back in February, you lifted your dividend by a mere 100%. Any plans to raise it any further?
We've always said that our dividend policy at the moment, until such time as we get through the Kibali capital cost, will be a growing dividend. And we've definitely outperformed our budget on an earnings basis, and so we'll keep to that strategy until such time as we can set our dividend once we've completed our big capital spend, which should end early 2014.
OK, we must leave it there, but my thanks to Mark Bristow, CEO of Randgold Resources. I'm Nigel Stevenson. This is Reuters.